Get out, everybody. We are having a baby pullback on Bitcoin. Baby pullback, but Bitcoin hasn't done jack the whole day. So it looks like there was recent news. Even though I'm not a news channel. I cover price action. If there's anybody new in here, so we're gonna this whole live stream, I will cover Bitcoin first, Ethereum maybe second, and I will give you tools to put on your chart so that you know different thresholds on when things become more bearish and when things become more bullish. And then if it's in between, then just don't expect much to happen. I'm going to try to give you those exact tools during this live stream on Bitcoin. Bitcoin and really altcoins are not outperforming Bitcoin right now. They're definitely taking a break. So I think Bitcoin is a great leading indicator for altcoins in general right now. However, before September 15th, the Ethereum merge, that was not the case. And Bitcoin was not an indicator at all for altcoins. Altcoins were killing it. So this, I will try to keep the Bitcoin coverage at about 12 to 15 minutes, and then cover Ethereum, then look at your live questions. And for anybody new, if you ask a question over there, it's likely that I will skip over it because I will hone in my eyes to the questions, the folks asking questions who have an emblem next to the name because they're part of the YouTube tier. And I answer their questions first, them in super chats. So no further ado. And again, Binance News, I think it just got hacked drastically, but I haven't confirmed that. And I'm not a news person anyway, so I'm not really going to go into that type of stuff. Here we are. Let me put on some of my levels and get ready for. All right. Bitcoin is doing a whole lot of nothing. It's going sideways. I'm going to show you the exact key levels and indicators that I'm using to try to determine is continuation either up or down going to happen anytime soon, or is Bitcoin just going to bounce around in roughly a 7% range, which in my opinion is very probable as of right now, until the Wednesday of next week when high impact economic data comes out. So through there, until that point, so we might have a whole week of nothing. But in this first portion of this video, I'm going to show you why it looks to be like that and the exact things that will happen when that becomes improbable. So it's almost like musical chairs, right? So imagine a chair here, right? And people are going around it, and there are only two people left, right? For VIPs, I think I did this in a VIP call yesterday. But at any moment, the person behind the chair, the probability of that person winning is low because they're behind the chair. You know, two people going around the chair and the music stops. The first person to sit wins, right? So the probabilities of who is going to win changes. It's a fluid change, right? On Bitcoin, it's not quite as fluid as two people left in musical chairs. The probability is changing at any moment, but I'm going to give you those exact key levels so you can know when probabilities are changing, whether we're going to keep ranging in a 7% range or break out to our 21K target or break down to roughly 19K target. So let's go get some Bitcoin. All right, if you want to take a quick snapshot of all of the items in my screen and the exact levels, they are perfectly labeled. I am on the, well, let me go to the 15-minute chart. These are all of the things that are in play for immediate price action. All right, they are labeled so I don't have to read it to you. And the only thing for new viewers that I might go over is how am I on the 15-minute chart with daily EMAs and a weekly EMA? I use what's called MTF EMA. And for my Discord and Cryptillion YouTube tiers, I've given a heads up on which indicators for. There are multiple that you could choose from, but which ones are pretty good to use. So this is what is in play right now. These are the main things that are going to essentially be the bumpers of price. So when price touches it, something's going to happen. But between bumpers, it's just nothing significant's going to happen. Does that make sense? So I'm showing you Bitcoin's bumpers. Specifically, how it reacts to them, that is in question. However, you just essentially, if you're below something, it's likely you're going to hit your head on it until you form higher lows and bust through, right? So these are the bumpers in play for only immediate price action. However, here's the thing, though. This might be all that happens for an entire week. So I think Bitcoin might stay between the October candle open, maybe a fake out just below it. So let's say between, just like a quick fake out below, maybe 19.3, all right, up to the weekly 10. And that's about a 7% range. And the weekly 10 is coming down, so this range might be shrinking. But I think it'll still maintain a 6 to 7% range through Wednesday of next week. And this literally, if Bitcoin is boring, these are your bumpers and why. Clearly labeled. And so therefore, on the short-term price action, because I think it's just going to bump its head and then maybe, bump its head on this and bump its head on this line and bounce off this. I'm not going to give you exact, what is it going to do for 7 days if it stays in here? I'm not going to do that because honestly, I wouldn't be able to guess. However, I do know that these are the main items to look at over the next 7 days, unless the probability of a 7% range breaks and it turns into being more probable of something else. So let me show you what that is and the targets it would go to, whether it breaks up or down, either within 7 days or after that 7 days, right? Okay, so within 7 days, the moment that boring range becomes improbable and therefore continuation up or continuation down becomes more probable is not just getting above the weekly 10, but as returning viewers, you already know what I'm going to say, but going above it, coming back down to it, right? Here, actually, let me do it like this. You got to go. Again, I cannot stress how important this is. It's not hourly closures. It's not 4-hour closures. It's not daily closure. Weekly closure, maybe. But you're looking for, even on the 1 minute chart, doesn't matter. Goes price. I hate that. I don't like that color. Here we go. Price goes above it. This is how price will move. So I'm literally showing you if the probabilities flip, this is what you'll see, literally, on small candles with the weekly 10 on. It'll go above it. It'll come back to touch it. How many times it touches it, I don't know, but it'll touch it. Might even go below it, form some higher lows, and then when it takes out that high, when it takes out that high, the first high it makes as it gets above. So essentially, to get above the weekly 10, you usually get some oomph, like some volume, some more, some bigger buy pressure, and it creates an initial. It's like the first high, right? But then it comes back down to test it, and so at this point, ranging is still, like, it's probably 50-50 at that point. Like, it'll just fall back into its range. But it's when it takes out the original high it makes as it gets over the weekly 10 EMA, that's when staying in this range becomes way improbable, but not until that point. Now, if it comes up here and bounces here at that exact snapshot in time, yeah, it might be more like a 50-50. It becomes, more improbable that it comes back down to the range, sure, but you don't have a clear probability to our next upper target, which is 21K, and again, I'll show you why, until exactly this happens. You don't even need to look at closures or anything. You could have structure of a 1 minute candle, and this is what it will look like with a very, very high likelihood. There are some exceptions. You could consolidate under it and then bust above without coming back to touch it. In rare cases, like less than 1 in 20 times that price interacts with the weekly 10, right? So sometimes it does, it just goes way above and doesn't come back for a while. But it's probably even less than 1 in 20 of times it interacts in a fresh manner with the weekly 10. So this is what you're looking for, specifically as it goes above here after touching it. So this moment in time right here. Can't stress that enough. And the same thing, but inverse, applies to breaking down. Okay? It's breaking down. But I'm on the topic of breaking up. So that's what we're looking for, how price will behave on the weekly 10 should we break up. Now, I have to go to a different Bitcoin chart, and I want to show you where price will go if it does break up in that fashion and why. All right? So let's take off all this stuff, and I will go to 2-day chart. I will take off my macro channel, and looking sexy. Yes, we are. Okay. These are origin lines. Returning viewers, I'm boring you, I know, but just new viewers, this is why you hit the like button and you subscribe to my channel, because you're not going to see Bitcoin. So, you're not going to see this stuff anywhere else. These are origin lines. You'll only find them on my channel, because I made them up and they work. I don't know why they work, but I know they do work. All right. And so what's happening right now is this line right here, price went under this line, and it's now going to hit its head on it. But in order to do that, it's probably going to race up to it after it gets above the weekly 10. So I'm going to zoom in. So this is 2017 top. Back in 2017, 20K top. This is 64K top, 69K top, $1,300 or $1,200 top in 2013. December 2013, 2017. Okay. All right. So we're going to zoom in way into here to see what's going on and why 21K is that target after you see price behave like I just showed you with the weekly 10, because it's an extremely high likelihood that's how it's going to move. It's not guaranteed, but it's very high likelihood. All right, here we go. So let's zoom into this bad boy. I will probably go to what time frame? Yeah, the 1 hour looks pretty good. Do I have a channel on here? Channel macro? No, that's not in play. All right. And I will throw on the weekly 10 EMA on the 1 hour chart. So a lot of times, even without the origin line here, so even though we're focusing on this in general on this chart, okay, that's where it's going to go, and I'll put a price tag on it so you can see that it's about 21K, maybe 21.1, something like that. So 21.1, whatever, 21, just over 21K. But a lot of times the way that price likes to interact in a fresh manner, which means it's gone way below this red. So this red line is the weekly 10, right? After it goes way below it and is really far away from it, its first attempt to get to touch it, it often likes to do what's called a failure pattern, just like this, which means it didn't get rejected because it did go above it, as you see here. This is a very aggressive. This was clearly a whale play, very obvious. But it's still a failure pattern. It went above it, and when it came back down to interact with it, it couldn't hold it. And if you zoom in even more, like to the 5-minute chart, hopefully it lets me go back that far. Come on, baby. Yes. Okay. So this is what I'm talking about. You'll be able to see on very, very small candles. Look, every time so perfect rejection, got above, came back below, did not use the red line as support. Okay. Here, it did use the red line as support, made a higher high, looking good. But when it came back to test it, so I'm going to zoom way in. So at this moment in time, right here, you had this as support, the weekly 10, on very, very small candles. You took out the original high, and it looked like it was going to go up. Like, because this is what, it looked like it. But why is this not the same thing as what I mentioned last time? Because the first local high, it did not use this as support. So after it makes a first local high, what makes it probable for it to go up after it passes this is if it sticks its landing on the red line. But here, because it went above it and came back below on the first move, right? Then anything else that happens after that, you got to be a little skeptical, right? Because remember when I drew that earlier, I said it's got to go back to the line, use it as support, right? Okay. So let me make myself small. All right. But this is what a failure pattern looks like on small candles. It just hovers around it, can't really use. So look, all these other candles got above it. When it came back down, did it use the red line as support? No, it used something else down here as support, like something that's not there. And it got above it again, came back down. Did it use the red line as support? No. So it looked very obvious to me at this time, during this on small candles, that whatever it was going to do is going to break down. And it wasn't going to stay above the weekly 10, right? Okay, so the same idea, like a similar situation, and actually, Bitcoin often interacts with the weekly 10 on its first approach to it after a long time. Very similar to this. Not quite like tanking afterward. This was a trap. But that we covered on my channel as one of two most probable things to happen during then. But it's not always this trappy. But in general, it goes above, can't use it as support, and comes back down. And if you do a failure pattern, so given that that's common, right, on its first, specifically first attempt, price touching that red line or weekly 10 in a long time, it's common to do a failure pattern. But if it does do a failure pattern, what will it reach up to touch just above it? That origin line that we were just talking about. So it's, even without the origin line there, somewhere around 21K would be fairly probable target even without the origin line, because it's the first time price has interacted with this red line in a while. So therefore, you just won't get above it on your first pass. Like your first attempt to skateboard, you're gonna fall on your ass, right? Like you're not gonna succeed your first try. And so this is Bitcoin's first try in a long time. All right. So it's probable, you got a fairly decent edge just because of that alone. But on top of that thought, and so I'm building up a case why, 21.1 is a freaking good target. Should you see Bitcoin, break out, right? Okay. So as I mentioned earlier, but if it does interact with the weekly 10 in this way, it might be a higher up failure pattern that reaches all the way up to here in order to touch the origin line. And then when it comes back to interact with the weekly 10, it just breaks through. There's a lot of resistance here. A lot of resistance there. In addition to that, people who trade more patterns, so they are going to be looking at a very simple trend line. Let's make that trend line more visible, Tim. Hey, look at this trend line. Where is that? Exactly at the origin line. And a lot of people who don't follow my channel, they don't know what origin line is, they don't use EMAs, they just use shapes. Well, they're gonna trade, they're gonna become sellers there. So when in order to have a better probability of something happening, the way I like to put it is like a safe trade. No trade is safe, especially if you're not using risk management. But to get a better edge, a better probability on your hand you're playing, whether you're going long or short, the moments that are the best probabilities of winning are so what I'm about to say is very important, okay? For new viewers, like, you're not going to hear this anywhere else on the whole internet, and it's very valuable. The most probable trades are represented by multiple groups of people who trade differently, who see the same thing for different reasons, who become sellers or who become buyers at the same point for totally different reasons. And that's if it gets to 21K, which it might not, right? Because I think it just might go sideways. But if it does get there, it's a pretty good target for a strong pullback. Will it, am I saying it's going to drop down to, 12K after that next leg of capitulation? No. But it's a very, very clear target for all these reasons, with a very, very likely, high likelihood of some form of pullback, which could result then in a higher low, and then it busts above there, 2 weeks later. That's possible as well. But that would be, on this time frame, we're looking at 1 hour chart, trying to get an idea of the next, just the month of October, like how price is going to move this October. If everybody was talking about October, right? This could, October might happen only until the October 15th. And once it hits there, it can't keep it up. And then the candle turns red, right? And on that first chart, I had two white lines, and I told you to copy them. These are the only things in play. The bottom one was the October open. And you need that on your chart. You need September's open of the monthly candle. And I had it clearly labeled. So go to the beginning of either this recording, this video, or the stream. And you need both of those on your chart. They're going to be huge. Because of how, and I'll show you. Here, let me show you why. Because the monthly chart is essentially, this is going to be a monthly candle breakout either way. Like, whatever is going to happen, it's going to be, it has a chance of being pretty big. I don't know if I like it on this chart. check this out. So you have all these candles just hanging out here. So even though this came from above, but it stopped here, right? It closed here. This, obviously this one opened here, but the next one, August, closed there. So you have this box essentially, right? And then September almost fell off the cliff, but it held on for dear life. And this month is trying to join this party again, right? And what happens is if October is going to be a red candle, if it is, I'm not saying it will, even though right now I think it's probable that it will be, but I'm saying if, and my opinions don't matter. In the event that October is red, what usually happens before the end of the month when it closes red? Like just on any time frame, 5 minute, 1 hour, whatever. If that candle is going to be red, what can you assume is probable for at least a portion or a percentage of that candle? It's going to go the other way and make what, and it'll be, so if you're thinking red, it will be green for some portion of it. And then it comes back down below its open, turns red. And that greenness that was green, it turns into the red wick, which is like this, right? So, and that's called a backfill. So even if this is going to be red, it's going to backfill to some degree. And that could be what this is doing. So now the question is, where are typical, so this is the third layer of why 21K is a really good target. This is the last one. What is a typical way to backfill, with the idea that it's extremely probable that any candle, whether it's green or red, it'll backfill the other way. Maybe not right at the beginning, but sometime during that candle. Some of the more common ones are all the way up to the previous candle's body, which is what this one right here did. All right, let me zoom in a little bit more so we can see this. Okay, a lot of times you get a backfill completely, especially if you have two candles, like you got a couple of them there, like that, but I guess three. This is three, but it goes up to the candle bodies of the previous couple, or in this event, a lot of times it goes halfway. So all the way to the body or halfway up the body. And if you look left and you only have a wick, a lot of times it only goes about halfway up the wick if this is going to be red in the end. So what is about halfway? So let's see, about halfway there. What is halfway up the wick? 21.1, the same freaking level. And if you zoom in, multiple groups of people are going to be seeing the same thing for different reasons. And another group of people, they know monthly backfills like to go about halfway up a candle or halfway up a wick, and you got both here. So now you got like 4 groups of people seeing about the same damn thing for totally different reasons. So this month of October, if you're somebody who's saying October, just realize 21.1 around that point it's going to be tough to get over it. And you shouldn't, be chest pounding for October until Bitcoin both gets above that level and uses it as support. Right? But until that happens, it is, I don't know if it's probable, but you don't have a great edge on a green October. Even all the statistics of all previous October stock market, it doesn't matter. This is a bear market. Most Octobers of the stock market were not in bear markets. So you should limit yourself in statistical data to only considering October in bear markets. And therefore, the ratio is not going to be as great. Like, you shouldn't use bull market Octobers. We're not in a bull market, either in stocks or in Bitcoin. So I really don't think that those statistics are even valid. Because the context is different, right? And I don't think, there's no edge until 21.1 is beaten by Bitcoin price. And I'm trying to communicate this because there was a lot of Twitter activity, on reputable accounts or just people in general talking about October, and that might lead other people to, start doing investor buying, DCAing heavy with high expectations, or, you're new to leverage and you think it's just safe to go long and you could get destroyed. I'm trying to help you. I'm trying. So if you're one of those people who have taken action with money and clicking, just realize that moving stops up or taking some profit or all profit until Bitcoin cools off here, that might be a wise decision, whether you're on spot trade or on futures. With the idea that you're totally biased towards a green October, I would cool down that bias once price hits here. Please and thank you. This is not financial advice, but I really hope that this analysis has helped you from a monthly standpoint, October monthly candle standpoint, and the short-term time frame standpoint. I'm not going to go over the lower targets yet because I don't think Bitcoin's going to break down. But if I can do it very quickly before we jump off of here, off the Bitcoin part, there's really no threat of a big Bitcoin breakdown, really until the October candle flips red. So the October open is right here at that point. So right when it crosses it in that exact moment, yeah, it's probably a 50-50 that you're going to break down, but it's not an edge until the inverse of what I told you earlier at the beginning of this Bitcoin portion is true. You make a local low as you pass it, come up here, use it as resistance, and then take out that low. It's at that moment right there. That's when a downside move, a continuation, like below 17.5, or just strong move down, that's when it becomes probable. And the reason that is because a lot of times, people, a lot of liquidity or just people's liquidation points and their stop orders for super high leverage, just normal leverage. A lot of those orders get piled up here under an obvious level. And then the big money, they have their bots and algos that can see that in the order books, and they just go get it and then go the other way. That's why it's not probable until you can determine, hey, it went down and then it took out that low, because until that low is taken out, it's like a coin flip which one's happening if it's an obvious level. Does that make sense? And that's your breakdown point, about 19.4, and that is where the October monthly candle started. So I've covered up direction, down direction, and what to expect sideways in a 7% range. All the exact key levels. Go to the beginning of this video portion. I really recommend you put it on your chart. It's going to help you drastically, and you will see Bitcoin use those as bumpers. I'm telling you, it's exactly what's going to happen, and hopefully that's helpful. Here we go. Now, Ethereum. Okay, that was 32 minutes. So much for 12 minutes. Okay, cool. All right, Ethereum's more obvious. Okay, so Ethereum is a little bit more obvious than Bitcoin price action, and here is why. Bitcoin is not in such a sexy channel, but Ethereum is. So if you want, I am on the 1 hour chart. This is called a rotated rectangle. And on the left, so where I am over here, all the tools, it's the fourth, even though you can't see them on my screen, it's the fourth one down, right? It's where the rectangle is, and you just do the drop down box, choose rotate rectangle. I would recommend you go to the 1 hour chart and make yours look like this. And this is August 6th where it begins. August 6th, okay? And this is going to be a fantastic guide for Ethereum, especially if Ethereum, either way, if Ethereum stays in this channel, well, then you have the bumpers, right? You don't know exactly how price will color in the lines, but you do know these are the lines in which price will make the color, right? And this is where buying and selling pivots will happen on these lines. It's literally that simple. And you have better probability at the middle lines and the top and bottom lines. So this line and this line are the best probabilities, second best probabilities, and all these. It's still good guides, but they're not nearly as probable as the top and bottom or the middle. Okay. Meow. Did I just say meow? Meow. If it breaks out, you have a good guide that you're going to get some form of continuation because you broke out of a channel that it's been in. So you have some level of edge, or better than 51% or better chance that you're going to get some continuation to the upside, especially given that you've already tested this line multiple times. So if it comes down and breaks out again, and especially takes out this high, so if if Ethereum were to take out 1385 roughly, it's probably going to go up pretty hard with Bitcoin most likely, right? But once it takes out the high, you're going to have to find some EMA, which is the weekly 10. And by the time it gets up there, it might be at 1435. Let's say it pulls back to this line, starts charging up. That's a 9% move on raw price. Okay, but that situation is not probable until one of these two highs are taken out. Just wicking above again. So just wicking, let me zoom way in. So just getting a little bit above this line, it doesn't make it probable. Why? Well, look at this. 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 Look at that. That's not how it works. You got to take out a previous high after you get above this, right? All right, so, and then after it does break out and takes out this high, your next guide is easy. Like, it's the best single indicator in the price of anything is the weekly 10 EMA. It is literally if you could have one best indicator on a specific time frame, and you could only pick one time frame, one indicator. I mean, the most powerful, it's like the biggest, baddest one is the weekly 10. So you have a clear target there. And what I said on my Bitcoin portion of this video is I was stressing the idea that, see how far below price is to this? So it hasn't touched the weekly 10 in a long time. Therefore, the first time it hits it, what does that mean? Just like skateboarding, your first attempt, you're going to fall on your ass, right? So its first attempt to touch it, if it touches it, it'll either get a rejection or a failure pattern and then come down. Maybe not reversal all the way down. It could form a higher low, but it's going to very likely correct there, right? So then you kind of have a good guide there, even when it does interact, because it is the first attempt. Now, had price poked its head once or twice already, well, then your probabilities of the third attempt, I mean, you're probably going to go above. The more times you kind of test it, the higher likelihood you're going to bust out. But the price was very far separated. I mean, look at this. Very far separated from that red line. Look, you can't even see the red line in here. And it's coming from the depths of hell to come touch this cloud. And it's just very, so even if it breaks out of this channel and you lose your bumpers, there you go. And that's really, so you just need this channel and the weekly 10 right now on Ethereum. And you honestly are absolutely super good to go. And if I can give you some ideas here, again, I expect some slideways movement on crypto until Wednesday of next week, which is, I think, the 12th, October 12th. So, because of high economic impact data with monetary policy in the U.S. and how that will affect the stock market. So until then, I think until next week, I would just say, just use these bumpers as your guide. And if it goes above, just use the weekly 10 as your guide. So I don't want to give you exact levels like which bumper is it going to hit. When you have choppy price action and price action is simply just waiting on the stock market and Jerome Powell to speak, you can't guess. You can't really guess. You just have to know where are pivot points, which will make people become buyers or make people become sellers. And that's the best you can do during expected choppy price action. It's a range. So you just play it as a range with bumpers and just use the bumpers until either a breakdown or a breakout, then you don't use the bumpers anymore. So those are my suggestions on Ethereum. Use your bumpers. If it breaks out of the bumpers, use the weekly 10. Good to go. All right. Yeah, Ethereum price is honestly looking nice again. About 20 days before the merge, it was so hard to trade, and it's my favorite asset to trade. I love trading Ethereum. And it was hard. It was harder than XRP to trade. It's like September through September 15th, September 1st through the 15th. But now it's looking sexy. Like, Ethereum's really good to trade. Great liquidity, decent volatility. I mean, it's on every exchange for futures and all that stuff and spot. It's just fantastic. All right. However, there are some advantages to stuff like Cardano and Solana because they are less susceptible to the whale plays that do quick moves. Usually it's Bitcoin and Ethereum that'll trick you out. And sometimes the effect of those whale moves, almost like electrical resistance. You know, if there's too much resistance in a line, like by the time it gets to where it's going, it's not enough to power something. So kind of like that going to Solana, sometimes that effect, you get the resistance down the line and it's not as nasty of moves of whale plays. But outside of whale plays, Ethereum is, I don't know, I think it's where it's at. All right, because it's got a little bit more volatility than Bitcoin. Okay, so yeah, I did Bitcoin and Ethereum. Let's move on to questions. Again, anybody new on here, I will likely skip over your question unless you have an emblem next to your name, because that is the YouTube tier members. And to check out what the YouTube tiers are, I'm not for sure on the live video down below, but on my normal videos, by the subscribe button, which new viewers you should hit now, and hit all alerts. But right by subscribe, there's a join button. You click it, and like a 90-second video pop up describing what they do for you. And then the links to the Discord community, it looks like this in the description section of all my videos with visual instructions on how to check that out. And then Twitter. Also, so my channel name with the number 2 on Twitter is my handle. All right, so let's start looking at some questions. I might take a sip. Is it past 7? Nope, I can drink coffee. 7. Mug. It's the kind of shit my wife buys me. Just because she likes to go and buy shit. Hey, I got you this. Why? Because it's cute. Okay, whatever. Hey Tim, can you do a DOT update? Hell yeah, we can cover DOT. All right, let's go check a look at DOT. Doesn't look very good on the week. This looks pretty bad. Phew. I need a moment to collect my thoughts. My first reaction, it's getting ready to dump. Like, when this drops, it's gonna drop fucking hard. I get one F-bomb a month. New viewers, I get one a month. So, sorry. I don't typically cuss, because I know people are sometimes listening to this with their wife and kids around. I try not to use bad words. This looks really bad. This looks among the most bearish ones I've looked at. I mean, just zooming out. Okay, so I think I've got my thoughts. I can't, I haven't identified the pivot points yet, but for the sake of recording this for other people to watch it later. All right, Polkadot price action right behind me with rainbows and no butterflies though. I'm going to show you a very sexy way to chart this, but it is looking really bad. So compared to Ethereum, which doesn't look like it's super bad, Bitcoin on the monthly scale it is, but on the lower time frames it's not. I mean, Polkadot is outlandishly more than most things. It looks like it's on the edge of a cliff with somebody stepping on its fingers. Like it's hanging. It's already fallen off, but it's hanging by its, its body is off of it. Its fingers, and you have the bad guy, bears, like a bear is coming up to maul your fingers holding on. This looks really bad. So let me show you some different ways to take a look at Polkadot. And what we're going to do here is I'm going to show you, with the idea that it does break down below this cliff that I'm going to identify for you, what your target will be. It's actually this green line, but I'll show you why. And it's going to be a big drop if it falls. It's going to be big. But you'll know where it's going to stop for at least a bounce. And I'll show you what you need to see in price for you, not for you, for the probabilities to flip. Probabilities flipping, meaning right now it's probable it's going to tank at some point this month in October. When do those probabilities flip, and what are you looking for in the chart? Let's go get it. All right, but yeah, taking off this stuff here. I mean, that doesn't look too bad, right? it broke out. So this is the top. This is, even though it's Polkadot, this is Bitcoin 69K top in November, right? And it's been in this channel its whole life for the last like 10 months or so. And if you break out of a macro channel, then that means that drastically increases the chance that you're having a macro reversal of sorts, right? Okay. But what happened in September around the time it came out of here, which greatly affected alts in a skewed bullish direction? The Ethereum merge. So it's possible that even though it broke out, and that by nature, without an Ethereum merge, that makes it more probable you're getting a macro reversal. However, we just had Ethereum merge. So if the merge is over and you see drastic pressure down, that means this only happened because of the Ethereum merge, and it's getting ready to go back here. It's going to join the party. Like it just left the party to go poop or something. It's going back to the party now, right? So let's go look at this pressure down. I mean, that looks like pressure down to me. Does that look up to you? It doesn't to me. That looks, okay, so just using some rainbows without price. Now the daily's too much. I mean, that looks like it's just going to keep going down. That looks down. That looks down as well. The 1 hour, to be determined. But what it looks like here is the rainbow went above the gray and blue line, got rejected by the gray and blue line, and it looks like it's going to get rejected again. All right, so the pressure on time frames 4 hour and above, the ones that move, so 4 hour to daily and all that, are down. The lower time frames, they're kind of in question still, right? All right, so let's dive into this, take off these, and let's go to, so structural analysis with no EMAs. I mean, just take a look. It is on the cliff. So the alarm bells start sounding. Let me make this a little bit more precise. I would say here. Maybe not a 1 minute wick below, but even a 1 minute like candle going below exactly this price point, 624. At the exact moment, even without using this as resistance, at the exact moment that it goes below $6.24, alarm bells ringing. When it becomes probable that you're getting ready to have a flood down is when it goes below, makes a low. It might spike above, but it uses it as resistance at some point and then takes out the low it made when it first went below 624. At that snapshot in time right here, that's when it's not just alarm bells, because the alarm bells went off when it just first went below. But that's when you have an edge to a strong downside move. So where's it going? Well, the green line from that macro channel, it's just going to, you remember the party and the going poop? It's just going to go join the party. And it'll likely bounce there. But I'm telling you, like, it's, do you have something before that? Maybe there's something, that's a big drop. The only thing left holding that offering support is this. It's all-time lows. Nope, it will bounce before that line. I apologize. So it'll take 2 legs down to get there. I was wrong. I forgot to look left. Bad mistake. So if it falls off of here and does what I just said, then you're looking at a big drop, and it's gonna hit one of those points, and it's gonna hit it pretty quickly, and it's gonna be a 20% drop. There's nothing holding it. There's nothing here. There is nothing here but clouds. It'll fall through the clouds, like on Mario Brothers or whatever. All right. When does it become probable that it doesn't fall off a cliff? It's very simple. When it takes out this high. Not on a wick basis, but you see, let's see here. When it gets above about 673, at that moment, then falling off a cliff becomes improbable, and then hitting upper targets becomes more probable. But until it gets 673, even if it hits 672, or it hits 673, doesn't get above it, even at that exact moment it hits it, it's still more probable it's going to break down over like the next couple months. But it's when it gets above here and as used as support and goes up, that's when the situation of falling off becomes improbable, and that's Polkadot. All right. Yeah, Polkadot looks like it. Whew. That looks really bad. Man, that looks bad. I'm surprised that it's that horrible. All right, time frame. What do you expect? $1 KDA. Thank you, sir. Okay. What was the question? Oh, yeah. When can we expect $1 KDA is a question I got in the live chat from a community member. So let's go look at this. I've been thinking 70 to 80 cent target for KDA for quite some time. Clearly, it's hasn't gotten there yet, but the question is specific, the timing and when. So with no further ado, let's go to KDA. Take a look. Man, it's holding on for dear life. Wasn't my last analysis, I said it's got to make up its mind by October something because it's getting smashed? What was it, the weekly 10? It's still there. Oh my gosh. What was it, the weekly? It had to have been the weekly. No, it was daily 21? Yeah, it's daily 21. Okay, so in the last time I covered this, I said what's likely going to happen is that unless Bitcoin tanks down, which it hasn't, it's going to hold this as support, and it's going to use the daily 21 as resistance. And by about, I think you might go to that video, but by about October 7th, right? For Americans, that would be July 10th, but for everybody else, other countries who use the correct systems. But I think I said October 5th, 6th, or 7th, it's got to make up its mind. Well, you just had a fake out acting like it was making up its mind. And now it's coming back down, which means, honestly, it looks like it's going to break down. It looks like it's going to break down, given that, wow. Yeah, so this is at the crunch time. And if you are more used to looking at shapes, I mean, you're essentially just looking at, this. Because EMAs, they move in angles, and then you have a support, so an angle plus a horizontal turns into a triangle. And I was anticipating this like a week and a half ago, and it's exactly what's happening because it was very obvious. The daily 21 is obvious resistance. This is obvious support. It was just obvious, right? And it is what's happening. And for new viewers, if you want to go to my channel, you can just search KDA within my channel and just look at what I said the last analysis and look at the time. This is so I would say very simply, when are you going to get a $1 KDA? Well, you're going to have to break below $1.37 first, and then you're going to find support here. Is that $1? It's not. So it might be a while because you're going to find pretty instant support right after you fall off this cliff. However, that might be a big move. That's 15%. And then what might happen is you form a different triangle. So for new viewers and returning viewers, and again, for people watching the recording, this is if you're new, just this is the time to hit subscribe and hit the bell for all alerts and hit the thumbs up button to help out your content creator. So after it falls below here out of this triangle and hits here, if it does, assuming it bounces, which it probably will, with the assumption Bitcoin isn't tanking, what will form the next triangle? It's a pop quiz. What's going to form the next triangle? Yellow line, which is an angle with the same base. It's like, is it a mirror image? So it's going to get stuck in another triangle. Like that. Just like I anticipated, this was going to get stuck here. It's probably going to get stuck here, and it might not go down until November 20th or, November 18th. So when $1 in December? Yeah, it'll probably be a little bit. I don't see it happen right away because it's got some good support here. I would say December at the earliest because even in November it falls off. It's going to take a while to go all the way down to $1. So I would say early December, mid-December would be my guess on the win. But outside of the timing analysis, which you can't time the market, that's just an educated guess. But hopefully these guides that you could put on your KDA chart and try to make it look like mine. The daily 21 is the EMA that KDA is dealing with the most. Use the daily 21 EMA, even if you're on the 5-minute chart. Draw this same horizontal, and then try to, at least eyeball how I did these 3 origin lines in play, and you're good. You're good to go. That's about all you need right now until something changes. And then during the live shows, people usually ask me about it. Then I'll tell you what's in play. But until then, origin lines, this horizontal, and the daily 21. That's really all you need on KDA. Boom. All right, have a long on Kadena from $1.38. Took some profits around $1.45. Good trade. Any probability of a good target if BTC? Okay. Let's see. Yeah, if it does break out here because Bitcoin legs up. It's not going to hit that origin line. The weekly 10. Because the weekly 10 is going to align with the horizontal. A structural horizontal made by wick up, wick down, or base down, wick down, candle bodies down. And then, so draw a box there, about right here. So you have structural plus the Big Daddy EMA. So if it does blast up with Bitcoin, then that is probably, in my opinion, not financial advice, if I were the trade, that would be my profit-taking mark. And I would probably take some profits before then, move stops into profit, all that stuff. But yeah, I probably wouldn't try to take it past there because you're probably going to get a pullback. So you might as well, if I were that trade, I would prefer to take profits. And if it does form a lower high, just re-enter. Because as it forms I said lower high, a higher low. As it forms a higher low, your profit goes down. So I would prefer to lock in my profit and not have my profit go down and re-enter. So I'm in profit again. Yeah, $1.56, right on the money. Because it could be a failure pattern above the weekly 10, or it could be a straight up rejection. But wherever the weekly 10 is at that point, that's what I would use as my guide. All right. VRA and flow. All right, let's take a look at VRA. Say, why is VRA not on my chart? The last time I looked at VRA, perhaps last week, we identified that this origin line, this gray line here, and the dotted gray line below are the key things to be looking at, in addition to a couple of EMAs, maybe some structural horizontals, which we'll cover here. So in this Veracity price analysis portion, I am going to show you what you would want on your chart to essentially give you the bumpers that price will interact with, right? And in between the bumpers, it's just coloring between the lines like in a kid's coloring book. And then with those bumpers, it'll give you the idea, it'll give you specific things to look for when you start getting an edge for a breakout to the upside or a breakdown to touch one of these gray lines here, right? But until then, it looks like it might just chop sideways, so let's go identify what those levels are. And the last time we looked at this, it was going down as there was some South Korea partnership news, and I was letting folks know, the chart is saying that people are not reacting to this, and still it hasn't, maybe off the lows it had at least, 20% move, but it's actually not bad. All right, so looking left, let's do structural first. Origin line here, origin line here. Okay, so it's not necessarily structural analysis, but might want to try to make these two lines on your chart as best you can. As close to as you can. All right, let me zoom out. So it kind of looks like that. And you really just need to deal with this line and this line because all the other ones are out of play. None of the other lines are going to be touched probably for months. All right, or over a month and a half. Okay, now, so let's assume we are dealing with some type of range now, all right? And until it breaks out of that, so I haven't identified it yet, even though that might be it, but until it breaks out of that, it won't hit this line and it won't hit this line. And until it breaks out, it's just going to chop around, which honestly is what it's doing right now. So let's try to identify what this is. What is stopping it? So it got, is it the daily 21? So that's the daily 10. Honestly, it looks like it, man. It does, honestly, it looks like it's going to go up to the weekly 10. So what I'm looking at, it looks like it's going to keep going up. If Bitcoin, honestly, right now, if Bitcoin does not start tanking below 19.4, which is, so if you're a Veracity fan, you need to go to Bitcoin and mark off the level about 19,360, because that is the monthly open for October. So as long as Bitcoin's above there, Veracity has a good chance to make this the move. Honestly, it's got a probability. It looks like it's going to go hit it. But when Bitcoin goes, the month flips red of October, that's your alert to say, okay, this probably ain't going to happen. So you probably need Bitcoin on your analysis of Veracity, and you probably just need one line. So as long as Bitcoin's above there, right, I think this looks like it's getting ready to happen. Let me show you why. So yeah, I'm actually small term time frame bullish on this. Micro time frame, I would say it wants to pull back and maybe hit the daily 10. So what I would use, I wouldn't even use much structure here. Yeah, there's not a whole lot of structure to use. So I would just use EMAs right now. I would throw on, this orange line is the 1 hour 200 EMA. And again, I'm on the 12-hour chart. Let's go to the 15-minute chart. All right. So I have it on the 1 hour 200 EMA, even though I'm on the 15-minute chart, and I'm using what's called MTF EMA indicator, so I can have a 1 hour EMA on here. And then this is the daily 21. So you want these two things on your chart for Veracity, and you want the weekly 10 EMA, because this might as well serve as the origin line, really. Those three EMAs you need on your chart if you're going to be playing this. Literally, this is going to be the most badass guide you can have. All right. If price goes below the daily 21 or the yellow, then it's going to come here. It has nowhere else to stop. Okay? So if it breaks below there, this is where it's going. It'll probably bounce to some degree. Is it guaranteed to stay above there? No. But as of now, it likely would. And as of now, it actually kind of looks like it'll stay above here. But if Bitcoin wants to leg down and toy with its own daily 10, which is a little bit lower, then Veracity might as well. But I would still say going up to the weekly 10 it still looks probable as long as Veracity stays over the daily 10 EMA, which is the same thing as the 1 hour 200. That's the same. It's the same thing on assets that trade 24/7, 365. On markets that close, the 1 hour 200 does not equate to the daily 10. But on 24/7, 365 assets, it does. And I just like it better because it's smoother when I'm on really small time frames. All right. So as long as it's above here, I think, honestly, the move up to the weekly 10 looks probable. This looks pretty good because it's going to create a bullish cross. So this crossing above here is a bullish cross. It's going to get continuation, and it could easily like 0047. Yeah. And once price goes below this EMA, the 1 hour 200 EMA, and uses as resistance, that's when this is no longer probable and the probabilities flip. So if you're above the daily 21, you have a strong probability that over the next 5-10 days, you have a strong edge that this weekly 10 will be hit. The probabilities change when you come down here. Let's say this is 65% chance of continuation up here. But once it comes down to this line, it might be 55% chance, but it's still probable. But it's not as probable as it was up here. Does that make sense? So these are when probabilities start changing. When it becomes less than 50% likely that this will be hit, that moment is when not just the wick below, but when this is used as resistance, even on the 5-minute candles. You see 5-minute candles bumping, then going down, bumping, then going down on this orange line. That's when it's improbable that this will be hit, and you lose your edge to the upside. And really, honestly, this is because the weekly 10 EMA is right there, you might not even need any origin lines right now. I might take that back. You probably just need three EMAs, MTF EMAs, so you can use, you could be on the small candles, like 5 minutes, and still see these larger EMAs. But honestly, Veracity looks like a good asset to be trading right now because it's volatile and it's predictable. This would be good for spot trade too. I might try this, especially if it hits the daily 10. It's a pretty good setup, assuming Bitcoin stays over the October monthly open or the month stays green, and that's around 19,350, around there. So you need Bitcoin, that one line on your chart, set an alert. If you're a Veracity fan trading this, if that alert goes off, that means, even if Veracity is above here, I would still probably kind of start forgetting about this being hit. Makes sense. It might start bailing on your plans or wiggling out, that kind of stuff. So these 3 EMAs plus one line on Bitcoin, that's all you need. That's Veracity. Cool. Yeah, Veracity is a nice chart right now. I like it. It's beautiful, actually. This is fantastic. Okay. Yeah, I think BNB got hacked, but I mean, I don't do news, so. However, if it is hacked and there's a BNB sell-off, BNB is a big enough of a deal to stimulate the next leg down in capitulation. It could be the stimulus crypto needs for Bitcoin to go to $14,500. It could be. Actually, it could easily be the stimulus needed. Because remember, when Bitcoin is in a bear market, it doesn't matter. So imagine a person with a weakened immune system. Not necessarily AIDS or something like that, but just like older folks, or, you just have a weakened immune system, a severely weakened one. You don't die from a weakened immune system. You can just die from the cold or die from influenza. Influenza probably take you out because your body can't fight it, right? But you don't know what the stimulus will be. You just know any stimulus, when it's weak, that'll bring it down, right? Does that make sense? So, for example, I did not predict the Luna crash, but I was able to predict the market doing this because I just knew it only needed a stimulus, and the stimulus will always come. I didn't know it was going to be like, Luna. I don't even think Luna was a driver, but for example, people who came on my channel say, you didn't predict the Luna crash. It's like, oh my God. So it doesn't matter what the stimulus is, but BNB could be that stimulus, folks. However, I think those news stuff just came out, and it doesn't look like the market's reacting very heavily right now, but it could snowball, so you might be prepared. However, the charts are not indicating it's a probability yet, so I wouldn't be too scared. Okay. Lows for VRA? I don't know. I mean, it's possible over the course of the next 125 days that Veracity doesn't go below 2 more origin lines down, but it mostly goes sideways. It could stick. It might not go the whole bear market below 0.003, right? But if there is a next leg of capitulation sometime around November, which I kind of think, and it does hit the same origin line, look at the difference. That's a big difference, right? I was saying here earlier, so that's a 24% downward difference. So I would hone in on this origin line, but it just depends on how, if does crypto have an aggressive leg down, or does it more bleed out? Usually crypto doesn't just bleed out. It'll bleed out and then get aggressive. But I would just focus on that line depending on when it hits it. So 0.0025 to 0.0030 might be good guesses for VRA in this bear market. Looking left though, you need to watch out for, so let me show you this. So if it gets more bearish than that, then what I would do is I would just look at structure, because the vast majority of bottoms on any asset happen at almost an exact point where you look left, like weeks or years or decades. It usually happens where you see structure. So some obvious structure points that are even below that, 0.002 on the dot right there, and then here and here. So yeah, 0.0015, 0.0020 are structural, like obvious potential bottoms, independent of origin lines. And if that were to happen, that would mean it would probably hit this bottom origin line. Yeah, it would go down 1, 2, 3, 4 more origin lines if that were to happen. Make sense? Yeah, you usually look left, but it is possible it doesn't go all the way down there. It is possible. All right, awesome. Flow. Well, there you go. Yeah, I would guess 30 to 60 cents on a time, just drawing out a time axis on it, but keeping the correct slope somewhere in that area. It's a huge area, obviously. It's 100% range, but yeah, I would just try drawing this channel and realize that, a bottom will happen at a vertical line somewhere, right? Like on the time axis, it'll either bottom in January or November. So this is in December, so it'll either happen in November or it's going to happen in January, right? So if it happened in January and it hit the middle line, that would be 33 cents. You just kind of play around with the timing axis and then align it with this with different lines on this channel. So yeah, 30 to 60 cents is probably a reasonable area to be interested in picking this up for a longer hold. Not necessarily for futures. I don't even think this trades on futures, but for a DCA perspective, pretty good targets. And it's fairly obvious targets because it's lived its whole freaking life in the same channel. So it's getting ready to come back into it. The next sneeze that crypto and the stock market has, it's going to fall right back into it. And when it falls into it, it's going to hit this orange line. It's going to fall right back into it. It ain't going to stop right here. It's going to go lower. Now, it could bounce off the top, though, a few times. So the top, it could bounce in. Once it finally goes in, it's going to hit this orange area quickly, which is what I denote as the point of control. All right, here we go. Hey, Harrison. Entry price targets. So I'm skipping down Harrison, then I'll go back up to on a Super Troopers kick. Yeah. Cheers for the meow. Hey, thank you. I will go back up to Ark's No Genius about XDC, but I'm going to hit Harrison real quick. Entry price targets for Scale and Aster. Entry. Okay. Scale on Bitstamp. Interesting. Scale Network Tether. I would wait till it hits this bottom line. This one's an obvious one. I wouldn't touch this until it hits this line again. Yeah, just draw that line. Whenever it touches that, that's a good time to pick it up historically, like every single time. So I would wait for it. Yeah. Now, it depends on the timing, though. Like, if you want to make a trade between now and in 2 days, well, that's not a good answer because that ain't going to happen, right? But from a DCA and investor standpoint, like, when do I start becoming interested in, accumulating this in a non-trading, in a DCA fashion, as opposed to a trading fashion, which is what I'm doing with Dash. So the way I'm accumulating Dash, I'm not just DCAing. I'm not DCAing at all. I'm using other people's money to accumulate because I'm trading it. And I think I've 2.75x to my dash since I think it was April. It might have been February. I might have started in February, but just spot trading. I've almost tripled my dash. All right. And that's different than DCAing. DCAing just means you buy some here, you buy some here, you buy some here, you buy. That's a different form of accumulation. So if you want to get into it and maybe look for some type of move up before that, I would pick a middle point. Yeah, just go to the daily chart, man. Or maybe even like the 4-hour. Yeah, go to the 4-hour chart on this. And just draw lines that touch a lot of, wicks down, wicks up, support, resistance, perfect. Yeah, so this line is exactly what it needs to be. So I would say, but the thing is, I can't give you the exact price points because look, if it hits it like tomorrow, it's this point. If it hits it and later, it's that price, right? It changes. So that's why I'm suggesting just got to put on the 4-hour chart and draw those two lines. And those would be pretty good times to try to pick it up for a trade up, I mean, look, so even if it didn't, it did something weak like this, hell, that's still a 20% trade right there. Fuck. Man. Wow. Yeah, this one's more volatile than what it looks. Damn, that's a 70. Wow. This has a lot of volatility. Damn. But yeah, I would wait till one of those two lines for sure. And honestly, I would just try to both. I would try this one first, and if set stops or bail if it keeps going down, then try the second one. That's how I would do it. All right. Aster. Ooh, this one's ugly. I don't think I would give you a price point on this. I would wait. This one's gonna go. Okay, so once the stock market and crypto has another sneeze, right, which hurts a person with a weakened immune system or whatever, this is gonna go a lot lower. Or it has a good chance to go way lower. And since there's nothing over here, I don't know if there's a good guess. Let me see if there's more price history somewhere else. Oh. Yeah, but I mean, this looks like a ledge to me. It has a chance to stay in this channel. Yeah, it does have a chance. I guess it does. But I mean, look, it looks like it's gone sideways so long here that it could come straight. Let's see, how big of a move would that be? Is it over 30%? That might, yeah, okay. So I would say, yeah, it's getting ready to fall back in here. So same deal, either the bottom line or somewhere in the middle. I would honestly give you the same answer for both assets. It's not a certain price. It's you have to draw this line, and when it hits it, that's your price point because the price point moves. If it hits it tomorrow, it's 28.55. If it hits it later, it's 25.64. Yeah, just draw this bottom line and the middle line, and you're good to go. Whenever it touches it, that's a good entry. Yeah, this one follows pretty good rules. But I would be careful because if you take your eyes off of this slope and you don't see this as support and this as support, I mean, it's fallen off a cliff, so yeah, gosh. I mean on this one, I would be more hesitant to catch it at this first line because it went sideways so long and it could I would maybe on my first try, I would be very hesitant to buy it on the first line. I would be way more comfortable buying on the second line because it went sideways so long. Therefore, when it does fall below, more people are going to bail. and people are going to get scared out, and it's going to create a lot of volatility because of all that sideways action, which your other asset, the other coin that you had me look at, it didn't have that. It won't invite so many sellers as this one will. Yeah, this one looks like it's getting ready to head down within the next month and a half or shorter. All right, so let's go back up to DCX. Who was asking about DCX? Even on Super? Yeah. Okay, long time no see. Hey, Arcs No Genius. XDC. Oh wow, it already hit my bear market target. Well, that was a fucking good estimate. It hit that and did what? 60% run. I would say this is very similar to Bitcoin, Polkadot. It is like most coins are doing this. You have a macro channel, and mostly because of the Ethereum merge, altcoins like outperformed the stock market and Bitcoin just to a crazy degree, only because of the Ethereum merge, which gave permission for alts to do something way more bullish in a bear market than they're really supposed to. And it's worked its way out of it. So the way I would try to set up, it looking like this. So try to make your chart look like this. I would say I would wait till the point of control. But what could happen is it might want to get some pretty good bounces off this top line. Like there might be a lot of good trades just doing this until it breaks. Because in order to break back in here to the point of control, you might need Bitcoin to leg down hard, like, below 17.5. But until Bitcoin has that next lower low, makes a new yearly low below 17.5, I think this one is going to bounce off the top line. Which still means, like, if it bounces 3 times, that's 33% down from now, right? So I am on the how small of a chart can you be on? What time frame? Yeah, 4-hour chart. So all of price on this can fit in a 4-hour chart within this trading range, this macro range. Try to make it look something like this. And then focus on, just realize that Bitcoin's probably going to make a new low before this is broken. And when it does, you're looking at the middle stuff. Yeah, I think this is, this one's pretty clear, cut and dry. Where's the weekly 10? It's hitting the weekly 21 right now. So right now I would, for any moves up as Bitcoin potentially goes to 21K, I would look for failure pattern above the weekly 21 EMA and look left on where that failure pattern would stop. It would probably be around here. So that would be as high as 3.8 cents, or get just a smaller, pattern like 3.5 cents to 3.8 would be my guess on upper targets, if assuming with the loose assumption that Bitcoin legs up to 21K over the next 10 days. But once it comes back down, you're just dealing with this channel again, and you have your very clear bumpers. All right. Hey, Tim, what's your thoughts on Deso and Time? Chronotech, yeah. Okay. Oh, it's on Coinbase now. How long has it been on Coinbase? Since June. Good for them. Um, yeah, this is bottomed. This is not going to go any lower. Most likely. This is, yeah, this, it already bottomed. This and what was it? RSR. Yeah, this coin and RSR have very, like, it's very probable that they've bottomed. This even more than RSR. I don't see it go, yeah, like, this is, yeah, it's not going to go 71% down. I could see the neckline of, so if this neckline of this, shape over here, if that is retested somewhere around 30 around 35 bucks, or yeah, 30 to 35 bucks, that would probably be a pretty good, I'm not necessarily saying an entry for a trade, but just a time to be, begin being interested in becoming a buyer. Because I don't think it's gonna go any lower. The whole bear market. This is too strong. Man, this is fucking wicked. How did it do this? It 9.5x'd off its lows. That is just freaking insane. And I mean, a lot of coins didn't even 9x in a bull market. This thing did it in a bear market. My God. Yeah, if this goes back down to 33 bucks, that's gonna be whew. I don't know what this is doing, man. This is just chilling in the Starbucks bathroom, waiting for the rest of the world to, like, be ready to go up. And if it does break down, and it breaks down hard with the next, market sneeze of stocks going down and Bitcoin going down, I would say my target would be 33 to 35 bucks. And a bounce at $42. So if it does break down below here, about 42, lower high. If it keeps breaking down 33 to 35, then it should be done. So 42, about there. Oh no, what did I just do? There we go. I hit spacebar. So around 42, look for a bounce, and around 33. To the upside, it's trying to get a weekly cross. So you're just waiting on the weekly 10 going above the weekly 21 for your bullish cross, but that might not happen until like May of 2023. Like it might just play around here for a while. I mean, hell, it might not happen until December 2023, but I don't see any big move up again until at bare minimum it gets back above the weekly 10. So this is the weekly 10 red, weekly 21. Those are the two EMAs in play. So if you're looking at this chart, obvious horizontal plus weekly 10 plus weekly 21, and then these two levels here for a bounce if it breaks down, and that's it. So 4 things on your chart. All right. Deso. I almost missed that. What are my thoughts on this? Interesting. Well, I mean, if I had been a person who bought down here, and then I just magically looked at it and it's way up here, not you, not financial advice, I personally would dump it and wait for it to come back down most likely a higher low, which is bullish, but I would prefer to accumulate with other people's money. So this looks like even if it went up a little higher, I would still wait for a higher low. However, before I did that though, I would want to know what news. So this is news, right? Was it a YouTuber or 2 or 3 that talked about this? Like, this looks like news plus YouTubers. That's what made this happen. So good job on this. But that means that this project has a marketing team that succeeded in that endeavor, and they succeeded so much that they can probably now pay their employees for the rest of the bear market because retail people bought the founders' coins that they had on the exchanges there. That's exactly what just happened. So, but that actually helps, if that's true, even like that's not sinister. It's actually good for if you're a fan of the project because they'll be able to pay whatever employees that need to be paid and keep the lights on and like stuff. It'll help them. This is too wicked. I would say. I would say a pullback to $11. That would be my target for a pullback because of this wick, this downside movement support. So support, resistance. Like this is too obvious. I would say $11 on the nose for downside movement. So if I were a person, again, not financial advice, if I were a person who had bought anywhere in this 100+ days, and if I were a person who sold now, and I bought back, I would wait to buy back 38% lower from current price. And again, before I would become a seller, I would want to look at how many YouTubers talked about it. Does this have a chance to be picked up by bigger accounts on YouTube because of this? Because it probably got on the top gainers list. So I would try to identify that first before I plan to get rid of it and then buy it back on a higher low. But just do a little. You need to figure out who was talking about it and what did the marketing team push of this project, because that's exactly what happened. And yeah, I would do that first, and that's what we got. So weekly 10, weekly 21 plus horizontal at $11. That's probably all you need right now. Again, the red line is the weekly 10. Yellow line's the weekly 21. That's very obviously what is happening, right? I mean, look, this is exactly what you should be looking at. The weekly 21 is in play. And then down here, it was clearly, before it really took off, what did it do? Got above the weekly 10, support, 3 check tests of support, took out the local high, kablam. Beautiful. Yeah, so whoever was doing this, they knew they wanted it. They knew it was going to go up a lot higher, and this is kind of like a group or a person with a decent amount of money relative to the market cap of this coin who knew they wanted more than they can get in one moment, and they just couldn't market buy all of it. So that's kind of what this is. Like, okay, I'll market buy some now. Wait for the market to go off. Market buy some more. Wait for this looks like that looks like what was happening. But it's better that happens because if you get somebody who doesn't understand market cap and liquidity and just market buys, it kind of messes up the whole run. If you just make it scorch up in 1 hour, you just kind of blow the whole run. But if you do something like that, that's nice. And it can turn into something like this. This is crazy. This is a very nice run. But yeah. And again, you could get some decent trades off this. Like if it were to come down to the 21, you could probably get some spot trades up to a lower high. I mean, look at that. Look, that's 22%. So I wouldn't be too shy trying to get a couple more trades off this yellow line. You don't have to wait to trade, and then you could get some good trades off the red line, right? And then, which at that time might be right at $11 actually. So yeah, by the time it gets down, it'd be like, yeah. So I would try it a couple times on the weekly 21, and then at the weekly 10, right around $11. It's really good setups, really good one. ArcSnow Genius X. Did I already look at XDC? Well, this. Oh yeah, I already looked at it. Right. Yeah, I already covered that. I couldn't tell in the small time frames. When's a good time DCA into Flux? Pokemon cards for Flux. Flux Pokemon cards. Not financial advice. All right. Yeah, from a spot trade standpoint, you're going to have a nice level here at about 73 cents. Or did it already hit that? Yeah, I would say around 73 cents might be your next decent spot trade entry for. So in spot trade, that means you can't make money when it goes down. So the way you make money was go down because you already sold and you're planning to buy back lower at a point then where it'll bounce, right? That's how you spot trade. You don't make money on the way down. You have to wait, which is what I'm doing with Dash and with Dash. And I would say 73 cents would probably be, if I were trading this, that's where I would want to, rebuy my coin that I'm spot trading for accumulation standpoint. So it doesn't mean you have to wait for this. This just means, like, personally, I would hit this Pokemon card hard at that level. Here, I'd be a little more hesitant, but as long as Bitcoin has a green month and this is hit, I mean, it looks like a pretty good area to become interested in becoming a Pokemon card user of Flux. All right, can Remark go down to $1? Well, once it falls off this cliff at $1.90, was it? Oh, come on. Yeah, at about $1.93. Once it falls off of there, it's going to hit here. Yeah, it can hit 90 cents. Absolutely. Look. Yes. Easily. Yeah, once it falls off $1.93, it's, I mean, look left. There's nothing to stop it. It's going to be, so, blue sky breakouts are usually pretty strong. I mean, and there is a general rule of thumb. It is a high probability trade to buy all-time highs, as weird as that sounds. In the event, there hasn't been an all-time high in a while, right, relative to the chart. It's not like it's been making all-time highs for 3 months and it's still all-time highs, therefore, hey, it meets the rule. No. A fresh all-time high. So this would be a fresh all-time low. Same effect. It could be pretty drastic. Yes, it'd probably go under $1. Yeah, so you might want to watch out for $1.93 on that chart. It would go down. JL, here is a debt crisis brewing. The bond market dollar. Yeah, JL. We talk about the global economy and time bomb stuff mixed with what you would see in the Dixie chart, plus European or a major currency. It doesn't have to be euro. Crashing. So I have a particular one VIP who is very into that stuff, and we get into those conversations a lot. So on the VIP calls, especially when Bitcoin's going sideways, there's not much trading. We talk about that stuff a lot more on Discord. So, if that's the stuff you like to talk about, we have definite our nerds slash maybe not actual conspiracy theorists, but what some people might label, perhaps incorrectly label as such. Again, on the Discord channel, the links to check that out are in the description section of my videos. And Gala, yeah, we can look at Gala, and then I gotta. Ooh, it went below there. Yeah, so that was a death sentence. Yeah, this one will have downward trajectory now. Yeah, this is going to have strong pressure down now. Like, there is very little chance for breakouts to the upside at this point. Oh, I hit my black triangle. Or maybe I drew the black triangle after it, already did this, and I was telling you, I was trying to, after it broke, and maybe I did do it. It would break here. Let's see here. What is it going to do? Well, on your chart, you need this horizontal, okay, this box. You need the top of it here, and you need the bottom of it there, and you need to draw a trend line like this. These are the three things in play, the major structural things in play. Okay, so I'm on the daily chart. You need that top line. You need to draw that on your, if you're a Gala fan, even if you're trading the 1 minute chart, doesn't matter. You need this macro line that goes back to its top. You don't need all this other stuff yet, because it's not in play. Right? So you need one thing and two things, okay? If you're going to be trading this, which honestly, it looks like a pretty tradable asset. I kind of like what it's doing, but there hasn't been much action recently. And then let's figure out what's in play. So to finesse stuff between all those bumpers, I would use, let's check out the most magical line in all of crypto, the 1 hour 200 EMA. It respects it pretty well. Yeah, I would use this. Okay, so I would use these three things. The trend line that I talked about, this box, and then the 1 hour 200. With those three things, you could pretty much have a pretty good idea of where price is going. So I would use this 1 hour 200 for micro time frames if you can get above it and use it as support. Okay, and take out the high, which it has not done. So it hasn't used this as true support yet, and it hasn't taken out the original high. So right now, it's probably 50-50 chance on direction. You don't have an edge either way. Right? But it has been getting above here, so it's not probable it's going to break down either. You just have to realize, like, I can look at this and instantly tell, because of this line, that you don't have an edge. It literally, like, new people, even when I was new, I thought what I'm about to say is stupid, right? Because I want to guess, right? I want you, I'm watching you to guess. But the best guess is, like, sideways right now. Like, that is one of the best guesses. Or the guess, perhaps, no, let me rephrase. The best guess is it could go up, it could go down, it could go sideways. So why is that valuable to be able to identify that that is the best answer? That means you don't have an edge. So don't be trading this hard right now. Like, this is a horrible time to enter. That's what it means. So save your money, because over time, when you're entering stuff at a bad time to enter, you're gonna get your ass handed to you, right? So maybe that's the way I should put it. Yeah. But it could go up, could go down, could go sideways, which means it's a horrible time to enter. And it also means I can't freaking tell which way it's gonna go in the micro time frames. In the macro time frames, I mean, as long as it's below here on the more larger time scales, as long as it's below here, it's very probably gonna go touch this blue line. So there is an edge to the downside here. But if you're trading on, even like spot price with no leverage, and you're expecting it to go down, here, it could do a move of 10% before it goes down 30, right? And if you're short on leverage with the idea that this is probable, you'll get your ass handed to you with price going up in the wrong direction or going the wrong direction, 10% raw price. Even on 5x leverage, that's half your money gone. Like, hopefully you'd be stopped out. You wouldn't probably be liquidated on 5x leverage, or yeah, you wouldn't be liquidated on 5x leverage. On 10x leverage, you'd be liquidated, right at 10 or 11x, with the idea that it's a strong edge to the downside on larger time frames. But in the very micro sense, I think it might want to gravitate towards here, right? So my answer kind of depends on what time frame. Larger time frames, down is probable. Micro time frames, I can't tell. 1 hour to 4 hour time frames, it kind of looks like it wants to hit this, but I still don't think there's an edge. Micro time frames, no edge. Short-term time frames, no edge. Mid and large time frames, down, you have an edge. But before that down move happens, you could get your ass kicked with a 10% move up if you're trying to short leverage. So, all right, next Tuesday at 6 p.m. New York, we will see you all then. Thank everybody for being here, and stay safe and realize that Bitcoin and all of crypto might just freaking range until next Wednesday. There might not be a lot to do unless you can anticipate a range and your entries and profit taking points are congruent to the expectations of a range. There's a lot of money to be made in a range, as long as you're not expecting breakouts or breakdowns. You can make money in boring price action as long as it moves more than 3% up and down, which sometimes Bitcoin doesn't. So keep that expectation, and that will help guide you through about